Hey everyone, welcome to Breakout Wednesday. It's the 21st of Feb 2024. It's currently coming up to 10 a.m. on the West Coast, 11 p.m. 1 p.m. on the East Coast. First of all, remember, this is never financial advice. I'm not a financial advisor. This is simply a video blog on how one trader sees market, and everyone needs to take responsibility for their own decisions. Okay, I'm going to talk mainly today about earnings and how I handle earnings announcements, because it's a big topic, hey, and it's something that, it's hard. I mean, I don't have all the answers for it, but I just have a system that kind of sometimes works, sometimes doesn't. It's super hard, and I'm going to talk through that a lot. But before I get into it, some stocks I was talking about last week, really quickly. JDO, I wanted it to base for another week or two, and it didn't do that, so no trade. STP, unfortunately, I was waiting for it to base a bit longer, and it was perfect. I should have put my order in. I don't know why I didn't, but I missed that, and wow, that's the best setup over the last week, 100%. Okay. And I was not in it, which is a shame, and it's one of those, whatever. You just need to get over it. Sun, I'm in that. That's in the self-managed super fund, so there's not much selling going on there. I'm just going to sit tight and let that do its thing over the next year or two or three, hopefully. IAG, likewise, big wide stop on that, and had earnings come out, little gap down, nothing major. I'm not too stressed about it. I'm just going to chill out and let that big base and that big major uptrend play out over the next 6 months, or hopefully a lot longer. Now, all the uranium plays are kind of coming back after that big run, okay? And this is why I I don't love it, I just think it's crucial to take half profits at certain targets, because quite often they come back, in the short term. This might come back to its 200-day down here, and then get on with it. It might come back and undershoot the 200-day. I don't know. I mean, no one bloody knows. And that's the whole point about, taking, some off the table when you get a huge upward move in the trading account, right? I'm not talking about the investing account here, just mainly the trading account, okay? And back to the investing account, the long-term self-managed super fund, the big miners are getting a little bit hammered, okay? And a few months ago, I was talking about BH breaking out of these huge bases and sideways patterns, and how I was really bullish on it, and how things change, right, in 2 or 3 months. And I'm still long-term bullish. I'm not going to touch my self-managed super fund holding in it. I'm going to get more if it dips. If we can get some, around these lows or these lows, I'm just going to wait and see. But my long-term view hasn't changed. And I think the investing account and the trading account, you just cannot compare them. It's like comparing, cycling to running. They just completely different sports. And it's just, to compare trading to investing is the utter height of stupidity, in my opinion, because they are so polar opposite, okay? My investments, I literally marry these companies, okay? Which every trader tells you never marry a stock. I mean, what a load of absolute bullshit. If you're an investor, that's the whole bloody point, right? I know investors who have been in penny stocks from $5 to $1, down to 10 cents, back up to $20. They are people that have a belief in these tiny little penny stocks that one day will turn into something major. Have a look at REA, okay? Let's just go for a monthly chart of REA. Now, obviously I wasn't in REA back here at, under $1. But there were people that were, okay? And if you're one of these guys who's like, never marry a stock, if you invest in it and it falls below its 200-day moving average, get out. I mean, you are never, ever in your entire lifetime gonna have a 100-bagger, okay? You are never gonna have an investment that goes from $1 to $193. It's just not going to happen, because it's impossible, okay? And so that's the whole point of investing, finding companies that you really believe in, that you think are doing important things for the world, and going to have a product that's, revenue growth and product growth and popularity, and people are using it and all that shit, okay? Read Peter Lynch's books if you're really interested in investing stuff. It's so different to trading, okay? Anyway, I didn't really even mean to talk about that. It just kind of went on a bit of a rant, right? What else is there? I want to talk about earnings, okay? But before I get there, one last stock, okay? GTK, it's been my best trade lately, and just letting it run, okay? I have taken a little bit off the table today just because I saw some of my paper profits in BMN get wiped away, and it pissed me off. So I took a little bit off the table in GTK, but I thought we shouldn't have. That was probably a mistake, but I'm letting the rest run, okay? Now, want to talk about earnings. Okay, first, before I get to earnings, in the self-managed super fund ages ago, I was talking about ALU. I posted Twitter a few times as well. And this is just one of these investments, right, that I've been open with and talked about it and really forgot about it, okay, because I knew I had done my research on the company. I knew it was growing. I knew I had a service that was required and needed and was popular. And I knew the revenue was growing consistently, and it was just a bit of a kick-ass company. I knew that it had a takeover offer ages ago at like $42.50 that the board rejected. Okay, and what a great call by the board, because they've just been taken over for $68.50. Okay, I still haven't sold it because it didn't gap up to $68.50. I think that the board's advised that, you know, the shareholders to vote yes on this sale, and I just think I'm going to get my full $68.50. Why the hell would I sell for $66? Okay, yeah, I'm risking a gap down if something falls through, but I tell you what, there's also a chance that someone else comes in and bids higher, and that happens all the time. There was a Chat with Traders podcast years ago. I forget the guy, but he's a fund manager in Sydney. I forget his name. It'll come back to me in a sec. But he has an entire fund centered around buying stocks that are under takeover, that gap up on takeover talk or a takeover offer, I meant to say, and then he buys them then, because statistically a lot of these will gap higher when other companies get involved, because if you're a competitor, you don't want to see one of your other competitors swallow a great business. And then all these other competitors sometimes come out of the woodwork, obviously, and they want to fight for that wonderful asset so that their competitor doesn't get a huge edge over them. And quite often that happens. I'm just going to let this play out. I've done well just by not really ever selling ALU, just by sitting back and doing jack shit. I'm not going to change my strategy on that until that final bell rings and I get my full payout, right? And now let's talk about earnings real quick. In my long-term investing account, in self-managed super fund, family trust, whatever, I don't give a shit about earnings. Okay, I believe in these companies. I sit with them through earnings. I'm just running through a few of them, Zero, PPM, and I'm not going to sell before earnings because that would be stupid. Okay, an investor's never going to do that. If I'm in a company I love, like ResMed, and they gap down on earnings, I get more, okay? Like I try and time it right, but then I'll get more, all right? And the earnings date is kind of irrelevant to me, other than I like to read everything I can after that announcement comes out to try and figure out, is that company still growing? Is the reason why I invested in that company still there, okay? If it's not, I might consider getting the hell out. But if it is, then, I see no reason to sell. It's just some short-term shit about fear about some weight loss drug, okay? Or is it actually a long-term change in this company where that weight loss drug is going to wipe out future revenue growth of that company, which, I don't believe is going to happen in ResMed, okay? Anyway, but in the trading account, it's a different story, okay? I was honest. I was, transparent about getting absolutely hammered in the Domino's trade, okay? That was in the trading account, bang, right? I shouldn't have held that into earnings, okay? Obviously. And lately, it's been brutal, okay? I mean, I wasn't in corporate travel management. This came out today, but holy shit, $19 down to 16. That's actually not that big, but anyway. Let's have a look at a few others. Data 3, okay, pretty good company, all right, and boom, straight back, this huge move, been pretty much wiped out. This is one of these companies that if I could get it at the right price, I would pick it up in the self-managed super fund, because it's a pretty good company, okay? You can do a bunch of reading on it. This report really wasn't that bad, okay? You quite often get very irrational, emotional overselling going on, and just people making dumb short-term decisions, and that can be your long-term benefit. And so companies like this that have a crazy drop, let's say this has another crazy drop. I've already pretty much shown everyone what I'm thinking, but if this can have another big bang down into in this buy zone, bang, okay, self-managed super fund, I pick up a great asset at what I believe to be a pretty cheap price for the next 20 years, okay? I sit back and I think over the next 20 years, a pretty damn good chance that thing's going to be a lot higher, or get taken over or bought out, whatever, okay? And so let's just talk about a few others. APP, the trade I was in on the NASDAQ, okay? Got stopped out for a really small loss because I knew earnings was coming up and I had a tight stop, blah, blah, blah. Holding that into earnings would have been awesome, okay? It's just an absolute gamble. LYL, I know a bunch of people in LYL that had earnings come out this morning and bang, straight up, right? Sorry guys. Another one, Woolworths earnings today. I mean, what a classic video with the CEO what was it? I forget. I listened to one on ABC news podcast, ABC Daily, but I mean, what an embarrassing interview that guy did, and he's obviously stepping down and pissing off after 8 years, but their earnings came off this morning and shit, a huge dump in. And so I could rattle through earnings after earnings after earnings, and I just think in the trading account, it's too risky. Okay, I can't hold shit into earnings in that short-term trading account, because the whole point of that trading account is to be riding these high momentum growth stocks and and momentum moves, and not trying to gamble on what's happening in an earnings report, because I just think then I'm just a gambler. I love gambling, but the point of my stock trading account is not to be a gambler, it's to have edge. I just don't think I have edge when an earnings report's about to come out, because I just can't tell the future. Okay. And so that's that. Now I just want to talk about some other stuff really quickly. A lot of these coal stocks. Okay, first of all, I want to talk about coals. Obviously, it's been hammered today too. I don't know if its earnings are out today, or if that's just having a sympathy fall with Woolworths. I'm not sure. I didn't check that, but it had a bit of a rally the other day, touches 200-day moving average, and then bang. Okay, just by having your 200-day moving average on every single chart you ever look at, I promise you. It's a good thing. Okay, it keeps people out of so much shit and so much trouble, and just keeps you out of stocks that are trending down. All right, it's not going to prevent from the odd dump, but it just, statistically speaking, it keeps you out of trouble. Another one is NHC. I mean, why the hell would a degenerate, anyone want to hold this piece of shit when it's right below all these key moving averages? Okay, and just if that chart was flipped. And it was a bullish chart, if we could just flip this chart, which I think we'll be able to do relatively soon with Protrader, that would be looking bullish as hell, right? But there's a lot of, I know, kind of investors that are sticking in here for its divvy. I mean, who gives a shit about its divvy if this thing just collapses by 20% or 30%, because it's below its all key moving averages, and it very well, it's got a lot of pain ahead of it. So anyway, that's another bit of a tangent. Now, a few stocks I'm looking at, and there aren't many, because we really need stocks to set up. Okay, they're really not setting up yet. So pause one sec. Oh, I had to take a call then. I kind of forgot what I was talking about. But there are a few stocks that are interesting that I'm watching. FCNCA on the NASDAQ is obviously an incredibly expensive bank stock, but it's just sitting up here with blue sky above it. And the interesting thing, so FCNCA is one of these companies that benefited from, the banking meltdown last year. They acquired a bunch of regional banks and all that shit. So the other one that did that, NYCB, New York Community Bank Corp, for those who follow, the news, got absolutely obliterated on, back in, a month ago. Okay. And a lot of the regional banks followed suit and got hammered, but there are a few which haven't. Okay. And I'm watching this setup here and hopefully just continue to tighten and tighten on tiny volume. And yes, it's expensive stock, but I'm looking at that one. An interesting stock, and now this has earnings coming out, I believe, tomorrow, I think, from memory, and I'm not going to obviously touch this before earnings, okay? But it's just, I thought it was interesting to point out all the green candles here. If you go through and just look up from here to here, count how many days, we have a green candle, count how many dojis and how many red candles, it's ridiculous. The amount of kind of that the buyers have been in control after the open, every single day. And so many years ago, I was involved in this trading strategy with a group of people, and we were, and we used to preempt earnings announcements based on things like this. Okay, I've stopped doing it. It was pretty much gambling. I'm not saying there's huge edge in it, but it definitely did win money for a while. And I think this is just an interesting one. Let's see what happens tomorrow, with this earnings announcement. But that was just more of a, bit of shit talk, really. There is a lot of the retail stocks are basing. Okay, here we got Maya. There's a few others I'm not going to rattle through, but it's just come up here and it's in a Davis box now, massive volume come in, and it's in an uptrend. And so I'm just kind of, need that to tighten now just for a few days here. Okay, if the market has a few down days, that'd be nice, and just hopefully Maya just holds tight in this little pattern. Okay, now, on the long-term investing front, there's just one company that I've been researching a hell of a lot lately, and that's S&P. Okay, and you do obviously just do your own research. I haven't instigated a position in the self-managed super fund in it yet. I'm just kind of probably going to wait for this massive resistance to break, and I haven't totally made my mind up on it, to be honest. But it's a real good growth story. Has a product that I know a few small businesses that use it. It has dominating the New Zealand market with a real chance to kind of grow that revenue base and get taken over, I think. So it's the sort of thing I'm looking at in the long-term account is adding a few more small caps. I've got in the self-managed super fund, I have one of the ones I have is VVA, which I've talked about ages ago. Okay, and I'm not going to bore people by talking about it all the time, but it's just it's this company listed that has just a bunch of gyms and small businesses, and at the end of the day, small businesses still kind of run our country. Do you know what I mean? Like there's that many small businesses around. And these kind of acquirers will obviously just group all these small businesses together and create a company. And this is profitable. It's growing. It's got a huge runway of possible gyms to acquire. And I've done well with it thus far. And I would like to kind of get in the same vein as the stock that I was in, Silk Laser, and exactly the same example as VVA in the sense that this was a small business that just had all these kind of laser clinics for women, and it was just profitable, it was growing, and then it got taken over and boom, and so I want to spend a lot more time trying to find the next Silk Laser, and that's kind of led me down the garden path at S&P and doing a bunch of research on that. I've still got another week or so of research doing it yet. That's about it, guys. I kind of just talked a whole bunch of shit then, talked for a lot longer than I wanted to, but take care. See you next week, mate.